Joining us right now is Sethi, managing partner and portfolio manager at DCLA and a CNBC contributor. Do you have any new views, sir? We're going to get some data later today on the path of the Fed, and how much does it even matter at this point to the way the equity market seems to be moving?
I think, Andrew, it's basically a call option, right? Powell's saying, hey, listen, if things slow down, we're here. And I think the tone is different from what we heard before in the sense that, people were really afraid that, wait, maybe the Fed is going to raise rates or stay here consistently. And I think as we get closer to the year and you're seeing some of the economic data soften, once inflation data comes down a little bit, I think, the Fed will be in play. But he's basically signaling we'll be here, especially as we get through the election season.
And so your sense, though, just very in plain terms, 2024, does he move?
I think he only moves if you see economic data really changing. I don't think he's going to do anything because the economy is still strong and there's no need for him to do that. And I think once you start cutting rates, then the market starts looking forward and saying, wait, what are we missing, right? That first cut's going to be, what did we miss? And I think if you can stay here and rates can kind of come down where they have already in the 10-year, and you've got strong earnings, Andrew, the key is going to be next quarter's earnings now, because we've run up so far. Expectations are so high, especially for the high multiple stocks. So that is going to be interesting to see where companies come out, not just on the quarter, but what are they going to do? What are they going to say for the next couple of quarters?
And is your sense that, is your sense that when you think about where we are in this whole thing, he talks about we could be another year or two away from getting to 2%. I mean, the shift in terms of that timeline is somewhat surprising, given that people were talking about, 2 years ago, we were sitting here saying, can you really get to 2%? How can you get to 2%? How long is that going to take? You know what I mean?
Yeah, no, I think it's going to be longer than people expect. Inflation expectations in the economy are pretty high when you talk about labor and you talk about rents and input prices. So I do think the Fed needs to talk about it. If he says it's impossible to get there, then the market's not going to react, well to that. So I think this is that dance that he plays with the market. But at the same time, the economy is pretty strong in terms of earnings and companies, but you are seeing softening. So really, it's that call option. He's there to say, we will be here to save you, but we're not going to do it until we have to.
Okay. Any concern that we're in overvalued territory at this point in the ball game?
Oh, I do think if you look at kind of the overall valuation of the market and you break down the subsection, we talk about this all the time, the big seven, the big five, they have to have really good earnings. So if you look at equal weighted indexes, I think that's where the opportunity is going to be in materials, industrials, select financials. These are companies trading at 10, 12 times earnings, and the rest of the market's trading at 21, 22. And you're getting earnings growth. It's not like you don't have earnings growth in the rest of the sector. It's just the concentration has become so much. I think being in other places as well, I'm not saying don't be in the other ones, will be good for you as well.
Okay, if you're right, what do you like then?
So in commodities, copper companies, Freeport, Tech Resources, I think in industrials, you've got after suppliers like TransDigm, I think will do well in that area. And then if you want to talk financials, JP Morgan, Morgan Stanley, they just had buybacks, increased dividends. So you do see a bunch of companies there across select sectors. You're not just focused on, hey, are we just going to be on an AI play and how's that going to do? Because if AI works, which it hopefully does, all these other companies and other industries are going to benefit.